Hello, I'm Craig Brelsford, and welcome to another episode of Small Stocks, Big Money. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Now, today's show features an interview with the CEO of Greenwich LifeSciences. Greenwich LifeSciences is a clinical-stage biopharmaceutical company pioneering an immunotherapy vaccine called GLSI 100, which is designed to activate the immune system in preventing breast cancer recurrences in HER2-positive patients. We'll learn more when we speak with the CEO later in the show. Before we dive into that interview, let's take a moment to recognize some of RedChip's top performers in 2024. Among them, RedCat up an incredible 1,293% in 2024. Alliance Entertainment soaring by 842%, Gorilla Technology, which gained 250%, and Nova Minerals up 149%. These companies have demonstrated the immense potential of the small cap market. Before we move forward, let's take a look at RedChat, a revolutionary AI chatbot for small cap stock analysis.
Think RedChip. Think RedChat. Answers in seconds on any NYSE or NASDAQ company. Fast, easy, precise. From blue chips to microcaps. Cash, enterprise value, analyst ratings. Answers in seconds. RedChat with SEC filing references. Think RedChip. Think RedChat, your AI assistant for every NYSE and NASDAQ company. Get the app today. RedChip, RedChat.
Now let's move on to our quote of the week. It comes from the book, Small Stocks, Big Money. The market is not simply a digital machine executing trades, reflecting buy and sell orders, and recording price movements. The market does not operate as an island unto itself. The market is an extension of the investors who bring it to life every day. Investors who breathe into it all their prejudices, presuppositions, knowledge and lack of knowledge, needs, hopes, and fears, rational and irrational volatility, and inefficiencies extraordinaire. This quote comes from Dave Gentry, President and CEO of RedChip Companies, and it is featured in Small Stocks, Big Money, a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now let's get started with our interview today with Greenwich LifeSciences. Hello, today we have Snehal Patel, CEO of Greenwich LifeSciences, trading on the NASDAQ under the ticker GLSI. Snehal, welcome back to Orlando and welcome back to our show.
Thank you. Very happy to be here.
Now, GLSI 100, it's being developed as a groundbreaking immunotherapy vaccine for preventing the recurrence of breast cancer. What makes your immunotherapy so unique compared to existing HER2-targeted treatments like Herceptin and Kadcyla?
So Herceptin and Kadcyla are approved antibodies. They're on the market today. They reduce the recurrence rate in half. And so the half of the patients that don't respond and do recur, our product appears to address those patients and actually prevents the recurrence in those patients. So if you think about our phase 2 data, which we published probably about 4 or 5 years ago, and is well known, but I'll repeat it again, we reduced recurrences by about 80% in breast cancer patients that were treated with our product. And that's quite remarkable. It's not been seen before, where we could prevent the metastatic breast cancer, which then prevents the death. Because if you can stop metastatic breast cancer, 75% of those who do recur don't fare well and eventually pass away. So that was the promise and the excitement from the phase 2 trial. And with regards to how Herceptin and Kadcyla, which is another antibody like Herceptin, work, they're both essentially reducing the recurrences substantially, but they're adding toxicity. And our phase 2 data reduced recurrences even more, but is very safe. The injection site reactions that we see are those kind of reactions that you would want to see in a patient. They're a sign of an immune response. And we saw no serious adverse events related to our product as well in the phase 2 trial. And that's how we were able to raise the money and start the phase 3 trial.
Snehal, Flamingo 01 is a pivotal phase 3 trial. It's expanding globally with partnerships now in Spain, Italy, France, Germany, and now you're expanding into Harvard and Johns Hopkins. Can you share an update on the trial's progress and tell us how these strategic collaborations are enhancing patient enrollment and credibility?
Sure. We started the trial with a handful of sites in the U.S., and last year we went from 30 to 40 sites in the U.S. And these are very famous hospitals. You mentioned a few: Harvard, Johns Hopkins, Yale, Stanford, UCLA, UCSF, the U.S. Oncology Network. All those sites in Texas are participating one way or another. Even in Florida here, Moffitt as well. And so we've done a pretty good job in getting to most of the sites geographically in the U.S. And then what happened last year in the beginning of 2024 is we received approval from the EU to start up 110 sites in Europe, in addition to the 40 that we've have now activated in the U.S. And of those 110 sites, we've probably started up and they're enrolling in about 80 of those sites. So last year, we spent a lot of time in Europe going to the sites, teaching them what we're doing, and getting them ready to treat patients. And we got 80 of them started, and we probably have another 30 more to go this year, and we're adding another 4 or 5 countries. So in Europe, we have the academic leader in Spain, who brought all of the hospitals in as one network. We have 40 sites in Spain. In Germany, that group is called GBG. We brought in 40 sites from Germany. In France, we have 20 of the largest cancer hospitals in France participating, and they joined as a group. We have Italy and Poland currently in the trial. And in Italy, we have 11 sites, which are all part of an academic network. And in Poland, we have about 7 or 8 sites. And now we're likely to add Ireland and Romania as new countries, and we're also potentially adding Portugal and Belgium. So what that allows us to do is to reach out to 150 different hospitals between the U.S. and Europe. These are the main hospitals that would sell the product eventually anyway. But we have the interest of the doctors, and what's happening now is the word is getting out about the trial, and we're starting to see the interest coming from the patients. So the patients would contact the hospitals or their own doctors, and the doctors would then refer them to the hospitals. Right now, with 150 sites enrolling, that's about 150 patients per quarter that we're screening. That means it's about 600, and that's where we are today as of the last quarter. It could go up, it could go down, but that means about 600 patients per year are being screened, and eventually maybe 95% of them would be enrolled. So we have a good enrollment rate now. And so the real question is, when do we stop enrolling? If we're looking to get to the interim data, with all these sites interested, we don't want to stop enrolling. We want to keep on enrolling. So that's a strategy we're working on developing right now.
Snehal, you recently announced open-label data from Flamingo 01 related to HLA safety and immune response. Now, can you summarize the data and how it impacts Flamingo 01?
Sure. I just described the size of Flamingo 01 and the enrollment rate and the KOLs and excitement behind the study from the PI standpoint. And so what we announced recently in the last month or so was data from Flamingo 01. So we designed the trial to have HLA-02 patients. These are patients that are about 50% of the population, and they were studied in our phase 1 and phase 2 trials because it's the most prevalent group. But it doesn't mean that GP2 won't work in the patients that are not HLA-2. So we have in the trial a third arm, which is exploring and treating with no placebo HLA-02 patients, non-HLA-02 patients. So the data that we announced, the first thing we talked about was the split of HLA, because we're testing for HLA. So we know about half the patients are HLA. It's actually 46% are HLA-02. And the other 54% are the other HLA types. So what would be interesting is, if we reproduce our phase 2 trials in the HLA-02 patients, if it's expanded to the other group, which are not HLA-02, we double the potential of the product. And so we've seen immune responses in the non-HLA2 also. We've seen immune responses before we treat them, and we've seen immune responses in the 4 to 6 month time frame after we treat them, which is very exciting and very promising because no one had ever tested non-HLA2 patients before. Also, we're seeing the same safety profile that we saw in the phase 2 trial. So the non-HLA-O2, the HLA-O2, and the phase 2 data are all similar in responses. So that's created a lot of interest in expanding the number of patients in all of these arms and adding a placebo arm for the non-HLA-O2s. So a little bit about HLA. HLA is a immune system marker. It tells the immune system if it's a cell or an organ that's from the body in the human subject or from outside. If it's outside, it attacks it because it won't have the right HLA markers that the immune system recognizes in the body. So it turns out that the way the immune system works with our product is we train the T cells to attack the cancer cell. And when the cancer cell is attacked by the T cell, it thinks of the cancer cell as foreign because we've created a bunch of T cells that want to attack the cancer cell. And that's where HLA plays in. So with the expanded arms of the trial now, it would be 4 arms, 2 that are non-HLA-O2, 2 that are HLA-2. We're really going to have 2 phase 3 trials built into this one protocol with the same number of sites. And that gives us 2 opportunities to get approval, or maybe by HLA type. It may not be that all HLA types work. But we've increased our chances of success, one, by increasing the number of patients, which helps statistically, but also focusing on not just HLA-O2, but all patients.
It always helps when there's no adverse effect in your trials. That allows you to expand the number of persons participating.
Exactly. And I think that's why the clinicians like this product, because after all the treatment the patients have been through, they've had a lot of toxicity. And in fact, their immune systems have been weakened because of the chemo and the surgery. So giving our product would boost the immune system for any kind of infection, not just the recurrence of breast cancer. And if you can do it safely, then it's a product that's hard for patients not to want to take.
Nehal, I want to hear more about the open enrollment rate that you touched upon just a minute ago. And I want to know specifically, how would it affect that all-important interim analysis?
Okay, so the interim analysis is set for 14 events right now with the current statistical design of the trial, Flamingo 01. But we will, now that we have this new open label data that shows the non-HLA2s are responding and the HLA2s are responding in a similar way to what we saw in the phase 2 trial, we want to increase the size of both of those HLA2 arms, maybe to go from a total of 500 to 1,000. And at the same time, we want to add a placebo group to the non-HLA2 group because we think that can become a phase 3 trial. So as I mentioned before, having these 2 phase 3 trials, you have to have the right number of patients in the study. So we need to go to the FDA, we need to go to the EMA and get approval to do this and justify the size of the trial. And if that's possible, then we would like the interim analysis to occur before we stop enrolling. The goal would be not to stop enrolling before you get to the interim, considering we have 150 interested sites that are enrolling well. We don't feel the need to stop enrolling and then see unblind the study, see the results, and then have to start up again. So part of this analysis and redesign of the statistical analysis plan will be to include the patients that will be needed to prove statistical significance at the interim, if possible. And if we have the interim analysis successful, we can file for licensing of the drug with the FDA right at the interim and not wait until the trial is finished.
Nehal, the breast cancer market is nothing short of massive. There are 700,000 new cases annually in the United States and Europe, and there are 9.5 million survivors out there. With this in mind, what is your commercial strategy? How do you engage this massive market?
All right, yeah, so the market is very large, and in fact, it's intimidating. We have 150 doctors that want to participate in the study, So they're going to be very influential in helping us to sell this drug. And more importantly than that, the market is so large that we have to make enough drug, and we also have to have a sales force and a marketing capability. So this is where we might seek the assistance of a large pharma company or regional distribution companies. So these plans have to get set in place during this phase 3 trial, because as soon as you have the interim data or successful data, within a very short period of time, you have to be prepared to launch the product.
I'm glad you mentioned that, Snehal. Manufacturing, of course, being a huge issue for biotechs. I want to hear more about how Greenwich has prepared for commercialization, and are you going to be able to scale up when that time comes?
That's always a big challenge for biotech companies, as you well know, and we are doing the best that we can right now. We've already made 3 commercial lots of the active ingredient, and we're now working on getting approval for the first commercial lot of the finished product, which is in a vial. And that process will require the EU and the FDA to review the details that are the results of that particular manufacturing run, and then we have to make 2 more. And then the big question you ask is, well, what happens if you have an overwhelming response and you have to scale up? So, one way to scale up is just to make a whole bunch more lots, but the other way is to make each lot larger. And so we're working with our commercial partners to work on strategies to increase the scale, because it's very important to be able to meet the demand in the market. And that's a huge expense for a company before it's approved, but it's part of what we have to do.
It'll be a wonderful kind of problem to have if that time comes.
Exactly.
Now, looking beyond breast cancer, Snehal, GLSI 100 has potential applications in other HER2-related cancers. What can you tell us about that?
Well, right now we're focused in breast cancer, obviously, because as we discussed, it's a very large market. But there is the potential for us to treat all the other cancers where there's some level of HER2 expression. And those we would do later. We would hope there's an antibody like Herceptin or Kadcyla or some new advanced Herceptin type antibodies that would be very effective, where we could then follow them. And most importantly, there are many levels of HER2 expression. There's high, low, and intermediate expression, and there are patients that have no HER2 expression. So we have to have the screening of these patients and all these other cancers to know which ones are high HER2, and to have help from other therapeutics that will work together with our product.
Talk about partnerships here, Snehal. I'm sure you've heard of the massive recent acquisition by Pfizer of Seagen, $43 billion. What is the possibility for Greenwich of partnering with Big Pharma?
Well, we don't talk about the status of partnering at the moment. We would talk about it after we know something is done. But Seagen had a breast cancer drug and maybe a different cancer, and it was selling about $2, $3, or $4 billion per year, and they had a huge multiple in their buyout. The players who would look to do something like this would be the large pharma companies that are currently selling breast cancer drugs. And so those companies would be the ones that would be natural to want to add something like our product to their product line. And so we constantly go to conferences. There's one this summer as well that we go to all the time called Bio. And it's a big partnering conference where all the pharma companies set up 30-minute discussions with companies they're interested in talking to and learning about. Now that we have this new open label data, we expect to be talking again to some of the companies we've talked to before. But we would not really be able to talk too much more about it till we know something is ready to be announced.
Snehal, your personal level of commitment to Greenwich has been impressive. Are you going to continue investing in your own company? And also that lockup period that you recently extended, would you consider extending it again? And of course, this applies to managers, other shareholders, directors.
Yeah, so I can't personally make a commitment to continue buying, but that's what I've been doing. Call it dollar cost averaging, if you like. And I've done it for a long time. Before we went public, it was a private company, and I didn't pay myself any cash. And so if you think about it, whatever compensation I received, I put it back into the company and buy stock. And this is the way we've done this company from the beginning. That's why we own so much of the company. And that's our commitment. And I will try to continue to invest, but I can't guarantee it. And likewise, when it comes to the lockup, this is an unprecedented 5-year lockup since the IPO. It's in the hands of the board. I don't, I have a say, but I don't vote for the entire board. So our board members will decide. But the idea is that because we own so much of the stock and we want our shareholders to feel comfortable investing, not fearing that we're going to dump this stock real quickly, we're going to probably keep the lockup going as long as it makes sense. But there are ways to set up a selling plan for management and directors also. That's an organized plan where the shares are sold in a way that doesn't affect the share price and is sold at a slow rate, so it doesn't, you don't see massive float increase. So our float right now is very low, and our intent is to try and keep it there as long as we can.
Now, turning back to science, what has the response to Flamingo 01 been from patients and clinicians?
Well, we have 150 sites, so that's one statement that the clinicians who signed up to participate in this study like the phase 2 data and want to make it available to their patients and want to help us develop it. But there are some sites that are screening and enrolling up 20, 25 patients. So those doctors are really committed. They really want to make it available to all their patients. And there are now groups where patients are communicating with each other and talking about Flamingo 01 on the internet. Those might be Facebook groups or HER2 positive survivors. And so we're starting to see clinicians being contacted by patients who are outside of their current hospital who want to come into their hospital for treatment. And this has just started over the past 2 or 3 months, coinciding with all of the activity in Europe. So we think that there's a next wave coming, which will be involvement of patients and their interest in participating in Flamingo 01.
Final question, Snehal. Give us the essential value proposition. Why should an investor take an interest in Greenwich LifeSciences right now?
I think the answer is very simple. Back in 2020, we announced our phase 2 data. The share price went from $5 to $158 intraday. And the valuation then stayed up in that range of $500 million to $1 billion for almost a year with spikes in it. And then we had to take the capital we raised and start the phase 3 trial. And right now we're turning the corner on the phase 3 trial. So I think the valuation and the opportunity for an investor, if they missed any of that in 2020, is to see it today and to think about how undervalued the company is and what the potential of the market cap and per share price would be as we approach the interim analysis. So we cannot promise anything. We're doing our best to make this trial successful. But if you think about where the company's value was in the past, it's likely that's where we're headed again. And so this is a great time to invest in the company.
Snehal, it is an inspiring and fascinating story. Thanks for being with us today.
My pleasure. Thank you for having me.
Now, to get more information on Greenwich LifeSciences, visit glsiinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free, and you can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like Greenwich LifeSciences. Watch this show again and explore hundreds of small-cap stock videos on RedChip's YouTube channel, and also go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly our client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, visit redchip.com and subscribe today. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money, a book written by RedChip's CEO, featuring interviews with some of the biggest players in the microcap space. Order your copy on Amazon today for just $18. Now, let's recap the company that we featured today. Today, you met the CEO of Greenwich LifeSciences, GLSI, on the NASDAQ. Greenwich LifeSciences is a clinical-stage biopharmaceutical company pioneering an immunotherapy vaccine called GLSI 100, which is designed to activate the immune system in preventing breast cancer recurrences in HER2-positive patients. Learn more at www.glsiinfo.com. Don't forget, check out our stocks page. It is the biggest small-cap stock portal in the industry. It has every company listed on the NASDAQ or New York Stock Exchange whose market caps are $2 billion or less, and it's categorized by industries. Watch this show again and explore hundreds of small-cap stock videos on RedChip's YouTube channel. And be sure to sign up for our weekly newsletter and learn about a lot of small-cap companies. Also, go to our website and sign up on our events page for the webinar series. We have webinars every week, several a week, in which we feature small public companies, mostly our client companies, and you'll hear straight from the CEO, and you'll be able to ask questions after that. Again, if you have any questions about any of our public companies featured on today's show, call us at 1-800-REDCHIP or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile of asset classes. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies. So please, always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new, exciting, emerging growth companies.